Good morning, everybody, and whoa. Okay, sorry about that. Welcome to the morning volatility. Hold. Why is it doing this to me? Stop. Okay, there's Mark talking SPX and EWG. All right, now let's get back to VIX being unimpressed with the move. Um, sorry, I'm a little bit flustered. Welcome to OptionPit.com, the morning volatility report. It is Andrew Giovinazzi, Chief Operating Officer of OptionPit.com. Mark is away speaking at a conference. Welcome. VIX is unimpressed. Also, we will have a volatility course, I believe, in our next Saturday class. Look for it end of October. We'll be sending out some stuff for that shortly. Our last class on daily options I really liked it. Our clients that subscribe liked it. We're going to be looking at some daily option trades today. And you ask, Andrew, there are no daily options, but okay, we are starting to have daily options, right? If you want to sign up and take a look at our course on how we describe it, it's posted in our website. If you went to, I believe, into the store, let's see if I can find it. Might not be up yet, but if you're interested in it, let me know. Yep, not quite up there yet. It's not in the store yet. But if you're a Option Pit subscriber, you have access to it. All right, with that, okay, what do we have? We have our typical no bad news is good news day in stocks. The VIX still has a gravitational pull to 12 almost every day, and then depending on some news is how far away we get from it. Over the last couple of weeks, the market has had a hard time holding these rallies. The unemployment report was okay, the ADP report, but it's not crazy. So there won't be any extra Fed raises. I think still they set the table, so to speak, as far as December, and then next year they're taking the election cycle out of it. And that's what we have. There's almost no bounce in gold. Little bit, GLD's up a little bit today. This morning it was about flat. The weaker than expected, a slightly weaker employment report will put a bit under gold. Did it do anything for treasuries? As I looked this morning, I didn't see a lot of movement. Even the TLT's weaker still by a little bit. So I think the problem is, I guess depending on how you look at it, is we are short of volatility catalysts that are sustainable. So, okay, the Deutsche Bank thing was okay, that could be systemic. However, it petered away. It petered away as soon as the news came out that there was a discussion to settle at a lower number. So that by itself, that kind of brought that whole issue of DB, at least, in my mind, it's not going out of business. The coast is not clear, but the volatility. Just look at the ACVAL. It was right. I mean, look at where it was and look at where it is now. I mean, that is usually a pretty clear sign that, don't forget, residual vol can still be there just because the thing was trading, $15.50. That's still $2 higher where it is now. And in my mind, I think you've got the negotiation going on. The November is starting to become like a purchase again. It's probably, on the downside, I would look at something like 1x2 put spread, something like that for credit, and then just buy a call. maybe a reverse calendar. I think you want a little gas to 15 and a half or something like that. But that kind of position where I think we sell some vol, a short calendar if you have the margin would be okay. But I think the problem with buying October, or maybe you do your calendar Nov D so we can take a look. The problem with buying October is you're buying 3 weeks, and you really don't want to own that. I think the October, if anything, you want to buy the Nov and sell the Oc. We can still look at that today as a trade, maybe on some kind of ratio, because the November has the earnings. Nobody's expected much. The term structure is inverted from Nov D, but you also got to look at Nov holds the earnings and October does not. Right? That's only 1 point of all. That's nothing. Right? So what's more important is you have the ability for the position to make money. Yeah, but again, you're looking at 50 vol. You got to look out. I mean, do you want to buy 50 volatility in April in Deutsche Bank? I don't know if that's really what I want. You know what I mean? So just in this case, I would say it's just the volatility is giving you a little bit of a story on what the expectation is. But if the bank doesn't go out of business, and it looks like that is really not going to happen, we could see the thing kind of spring back, right? It was just trading 11.5 is the low. Oh, okay, good. Yeah, we were trade $11.50, and ever since then it really hasn't pulled back, and the vol's still going up. So I think if you could create October calendars, you could see some positive news. I think you still might want a couple long contracts. I think things could easily fly. We looked at them a couple weeks ago when they were dirt cheap. So we'll try again today. As far as banks in general are all moving higher. So to me, that's more of a rate thing than anything else. But it looks a little Goldilocks. As far as the rally goes, it's just okay. And with the market at all-time highs, I still think we need more reason to rally and kind of break out to like 220-200 and higher for SPX. And this has been the sticky part for VIX for the last several weeks. We kind of get down to this 13, maybe high 12s, and then some other piece of news comes out. So oil looks okay. Ratio put spread, short put spread, something like that, and even USO or some of the major oil producers. It's just feeling like you look at them and just take a look at Exxon. It's just not. They'd have a hard time. They're having a hard time going lower at this point. Okay, they weren't the grand bargain that they were then, but Exxon's held up very well. I think there's better deals in the producers. The offshore drillers are probably the most discounted part, but it's one of those things where they're losing their backlogs, but then I think maybe in a year or two, if oil prices stabilize, they might be gaining them again. So it depends how early you want to be. Still pretty speculative, but definitely cheap. So I think there's good things. Remember, financials and oil, for the most part, have only just started helping the market, and that will help drive higher. I still think the best place in general for the year, I think all the Q stocks, all the bigger technology names are those the ones driving earnings growth. But if you get a little help from interest rates, the financials and oil kind of stabilizes, we could see a little bit higher. But even now into the end of the year, unless we have something surprising, I would be surprised to see us close at all-time highs without like better earnings or something concrete pushing us along. And there you are. That's our morning vol report. We'll look at a bunch of issues or several issues today, and I will talk to you all a little later.